All right, this is going to be over the 14th of July. So, big gap up. So, as always, with big gap up, big risk, big gap, 20% chance in general is going to be the low of the day. So, it looks like it's a high probability buy. It's not as high as you think. Some traders will buy above, but they'll be very, very quick to look to buy some sort of pullback. So, disappointment. You will have a lot of traders possibly exit at the close. Others may try and get out at break even, and look what happened. And this fascinates me. So, you get a high, 84.25. You tried it, you get long at 84.50, 84.50, 84.50. You just tried to get out at break even. You were disappointed by this bar. What do? Smart traders, in general, would get out below this bar because they know 20% chance of seeing the low of the day. Maybe it increases. Maybe it decreases. Maybe it decreases. So this is not great math. You have to think about it like this. If you're disappointed trying to get out of break even, your stop's here. You're already disappointed once. Therefore, what's the probability you go to here before you go to here? Well, here's your problem with that. And it takes a while to think more like this, and this is easy after the fact. So one of your problems is this. It's twice your risk. If I'm long at this close and my stop's down here, and there's a reason this stuff happens. It's computerized. Make no mistake about it. If you buy the close here and you put your stop down here, you're disappointed and you try to get out at break even. Well, if you're here and you have to make the decision quick, but I'm really analyzing it here. The distance, if you're trying to get out at break even, which is up here, that's arguably, let's just say there's a 50-50 chance. I mean, keep it simple. Let's say there's a 50% chance it goes to here before it goes down to here. Or there's a 60% chance. Well, if there's a 40% chance that price doesn't go anywhere up here and goes down to here, or even 30%, you still may lose money. That's why it's easier to just get out and move on. Then you see that, pause, boom. So bulls try to get it out of the bottom, failed. Second leg. So leg one, pull back, leg two, pull back, leg three. It's a wedge, double bottom. Some traders, you can buy here, but other traders will wait and see what we get. Big bull bar closing on its high, but fairly tight channel down. Close to the moving average, you have to wonder, is this a wedge? One, pull back, two, pull back, and maybe three. And maybe it wasn't. Second entry short, and boom. Now we're at the moving average. So, breakout, follow through bar, gap at the moving average, climactic behavior. So, breakout, bad follow through, breakout, bad follow through. Every breakout you've had has had bad follow through. So, is this going to be the first good follow through? I'm suspect. So, and then we get this. So, this makes things difficult. But one thing to think about this is it's difficult for two reasons. And whenever it's difficult for a few reasons, you get a squeeze. You get some sort of a squeeze up, squeeze down. So think about the logic here. If you always want to assess how easy it is to either stay short or to buy. So if it's really easy to buy, but you got to get out, you got to buy, you got to get out, you got to buy, you got to get out, and it becomes more difficult to sell. So up here, it's not easy to buy. Correct. It's also not easy to sell either. And although you can look at it both ways, you can say, oh, well, we keep trying to bottom. So eventually we're going to rally because these bears that are selling, they're getting shaken out. And how do they sell again? Do they sell here? Are they disappointed? Do they get out around the moving average? All that's true. And then they get this big rally. There's no way the bears are going to win. And I don't get it. Why are the bears failing? Why, how can we get a strong rally like this and all of a sudden find sellers. Well, that's because these are vacuums. And as strong as this looks, it's a double top, so traders will sell, stop up here, and bet on a new low. So it's an endless pullback. Make no mistake about it. It's a tight channel, and you have to be careful because that can happen. And with this being a wedge, which I forgot to mention if I didn't, but I'm trying to kind of make my point here. It's a wedge, and we're selling off. You have to wonder, boom, we just got the breakout. So now it's a new wedge. Or is it? Got to be careful about this. This happens a lot where you get a new push, so 1, 2, 3, but gee, 3 looks pretty strong. Or you get 1, 2, 3, and you know, this is pretty strong. This might be a breakout, and you might be right. A lot of traders won't sell there. They won't buy. So will they buy here? Well, they very well might. And this is what makes it difficult. If I'm selling, maybe I get out of shorts there. I don't know if it's strong enough for me to buy to go long. And then when outside up, boom. So right there, traders will, some will buy, put a stop below. And then they say, oh my gosh, I'm disappointed. And then you get big breakout, follow through, and more down. So these days in hindsight look easy, but they're not super easy. You get a wedge, 1, 2, 3, bear breakout, and follow through down, or spike and channel, or it's I think the wedge is more here, and this was the breakout, and we had a pullback. It's more conservative. But either way, we got the breakout, and we're selling off. Big bull bar, so it's definitely a surprise. Maybe 3 pushes down, 1, 2, 3, wedge. It's exhaustive, and every so often, that's why Al talks about putting a tick, stop, a couple ticks, maybe a point or two above a bear bar, because that can happen. Strong enough, you put a stop below, yes. So we're rallying. Odds are you'll get a second leg down. A second leg up after this. It's always in long, but could be deeper than you want. Some traders will sell and sell more lower, hoping they can get out, and couldn't quite get out. But no reason to, if you're selling, you're selling betting on a pullback. You're not selling to bet on a new low. Traders will notice the strength of the bears weakening or weaning off, so they'll start to buy. And this is what we get as a result. So anyways, it starts to get kind of confusing, and kind of going to wrap up today. Overall, big down, big up. They expect somewhat of a trading range, maybe a spike, pullback, 3 pushes up. So hope this video helps, and comment if you have any questions. Thanks.